Hey guys, episode 19 of the Mortgage Guy podcast is live. If you're a realtor, if you're a mortgage guy or gal, this might help you save a deal either now or in the future, because I guarantee you've run into this in the past. And but if you ran into it as an individual yourself, as a borrower, I think you'll get a lot out of it. So here's a quick clip. Hey guys, how are ya? I'm Adam Lesner. This is the Mortgage Guide Podcast, episode 19. Welcome to the Mortgage Guide Podcast, where it's my job to dissect some of the most interesting mortgage challenges and give you some of the tools and solutions that you need to accomplish your homeownership goals, hopes, and dreams. Whether you're a first-time homebuyer or a seasoned real estate professional, I guarantee you'll take away some helpful nuggets in every episode. I invite you to subscribe and please drop me a review. I appreciate you stopping by. And today we're jumping into mortgage included in bankruptcy. So talking about the waiting period when you had a mortgage included in the bankruptcy, whether or not a foreclosure took happen, when it took place, and so let's just dive right into it. So there's an interesting guideline with a conventional Fannie Mae mortgage where the waiting period to obtain new home financing is based on the bankruptcy discharge date, not the foreclosure date. Today, this episode is for anyone who's ever had a home included in their bankruptcy and are looking for answers of when they can buy a new home. It's also for any real estate professional or mortgage person who might have this type of scenario that they ran into and they're just not sure what to do. So let's look at it. Waiting period, mortgage included in bankruptcy. Here we go. Let me paint a picture for you to make sure we're on the same page when this guideline is used. You filed for bankruptcy and listed your home and mortgage tied to that home as included in the bankruptcy. The bankruptcy was discharged in, let's say, 2014, but the home that was included in the bankruptcy wasn't foreclosed until 2017. Most lenders will tell you that you have to wait 7 years from the foreclosure date before you'll be eligible for conventional financing. This is either because the loan officer is just unaware or because their company has an overlay that doesn't allow this guideline to be used. But wait a minute, you're thinking you surrendered that property in the bankruptcy 4 years ago, and the guideline states that when including a mortgage or a home in a bankruptcy, the waiting period is based on the bankruptcy discharge date, not the foreclosure date. Keep in mind, just so you know, this is only for conventional Fannie Mae loans. This guideline does not apply on FHA loans or government loans. This guideline is for borrowers who vacated the property at the time the bankruptcy was discharged or around that time. Remember, your intent was to surrender the home as part of the bankruptcy. If you stayed in the home and were basically mortgage or rent free for several years and then now you expect to buy a house by using this guideline, there's a good chance that the loan will be declined. The guideline is not designed to help if you did not truly surrender the home when the bankruptcy was discharged. If you did vacate the property and got into a rental, paid your rent on time as promised, this guideline is perfect for you. So it's actually extremely common for lenders to not complete foreclosure proceedings for several years after the home was surrendered in bankruptcy, but this guideline is what saves the day. So here's a guideline straight from Fannie Mae. If a mortgage debt was discharged through a bankruptcy, the bankruptcy waiting periods may be applied if the lender obtains the appropriate documentation to verify that the mortgage obligation was discharged in the bankruptcy. Otherwise, the greater of the applicable bankruptcy or foreclosure waiting periods must be applied. So, on conventional mortgage loans, the waiting period is 4 years from Chapter 7 bankruptcy discharge date, and 2 years from Chapter 13 discharge date, or 4 years from the dismissal date of the Chapter 13. But if the Chapter 13 was dismissed, that means the bankruptcy wasn't completed and the debt wasn't settled. So if you foreclose on that scenario, the waiting period will be 7 years. Where to look? So the guideline I just stated says that the lender must obtain appropriate docs to prove that the mortgage was included in the bankruptcy. What does that mean? It's pretty simple, actually. if you retain copies of your bankruptcy docs, not just the discharge. Sometimes that can be a challenge. So when filing bankruptcy, there are many schedules or different sections that are drawn up that identify assets and liabilities that are included and excluded in or from the bankruptcy. What you're looking for: Schedule A, which is real property, real estate that is owned by the person filing bankruptcy. Schedule C, property claimed as exempt from the bankruptcy. So if your property is listed on Schedule C, that means you do not intend to surrender the home in the bankruptcy. Schedule D, this is where you'll find the mortgages or the other debts that are included in the bankruptcy. So let's talk about different bankruptcy types. Chapter 7 bankruptcy. With Chapter 7 bankruptcy, it's pretty straightforward. If your mortgage was not reaffirmed, your mortgage was surrendered in the bankruptcy along with all the other debt that you listed. Once the bankruptcy is discharged, your obligations are gone, essentially. With Chapter 13 bankruptcy, it gets a little tricky. Traditionally, Chapter 13 bankruptcy is considered to be like a reorganization of debt, enabling individuals with regular income to develop a plan to repay all or part of their debts. You and your creditors agree to new terms on your debt per the bankruptcy terms, and you retain the assets associated with that debt. You make your payments per the bankruptcy, and once all your payments have been made, the debtor delinquency is settled. Some people use Chapter 13 bankruptcy as an instrument to actually save their homes from foreclosure. In those cases, typically the mortgage debt that is included in the bankruptcy is just like an arrearage or past due payments. So the bankruptcy in this case would act as a tool to help you keep the house while getting caught up on what you owe. In this case, the home would be listed on the Schedule C in the bankruptcy, which is property claimed as exempt from the bankruptcy. However, there are many cases where the home and entire mortgage is included in the Chapter 13 bankruptcy. If that's the case, the home will not be listed on the Schedule C, and the home is considered to be surrendered. When the home is surrendered in Chapter 13 bankruptcy, you may need more than the Schedule C to convince the underwriter that the home was in fact surrendered in the bankruptcy. This again is because traditionally Chapter 13 is considered like a reorganization of debt. So showing additional proof. Each state is different, but you're looking to show further evidence of home being surrendered in bankruptcy. Look for a form stating Chapter 13 plan and motions. This will once again declare what is to happen with the real estate and the debt tied to that real estate upon successful completion of Chapter 13 bankruptcy. If the home is surrendered, the Chapter 13 plan and motions will state that accordingly. As an alternative, if it turns out you do not meet traditional lending standards and guidelines with regard to bankruptcies and foreclosures, if you don't fit within the box, a portfolio loan may be the alternative solution for you. Basically, a portfolio loan is like a mortgage designed for borrowers who don't qualify for traditional home financing. Whether the issue is credit related or otherwise, a portfolio loan may be the solution to get you into the home you're looking to buy while you wait on appropriate time to pass before being eligible for traditional financing. I'm going to end with this. The most important thing is keep records of all your bankruptcy documents. If you find out that you couldn't find them, see what you can get at the courthouse, call your attorney, get as many schedules and documents that you can pertaining to the bankruptcy, because your lender's going to need it, and if you don't get it, they're just going to ask you, and it's going to be annoying, so just might as well get it. I can't tell you how many times I request bankruptcy documents, and all that I get is just like a proof of discharge. So in order to document everything properly and make an appropriate lending decision, lenders need all documents associated with the filing, the amendment, and the discharge of the bankruptcy in question. If you've had a home surrendered in bankruptcy and have been told you need to wait to buy a new home based on foreclosure waiting period, conventional Fannie Mae loan may actually be the answer. And if it's not, a portfolio loan might work. But I invite you to not give up because there are options. Again, either get a portfolio loan, search for portfolio loans, ask me a question. You can contact me on balanceprocess.com/contact. But I really appreciate you stopping by. Thank you so much for your time and attention. I hope it was helpful, and I look forward to seeing you next time on Mortgage Guide Podcast. Thanks, guys. We'll see you soon. Take a look wherever you get your podcasts, and don't forget to subscribe if you like it. If you hate it, give it a thumbs down. Whatever you want to do. I appreciate it, and I'll see you guys soon.